Good afternoon. You're watching AB Live in the time of COVID-19. So today we are going to be talking about business impact mitigation and tax reliefs for the businesses here in the region. Right. So the Dubai government recently on the 12th of March 2020 announced an economic stimulus package to enhance liquidity in response to the COVID-19 outbreak. So I'm just going to take you through some of the key points of what was included in this package. So some of them include first a refund of 20% of the customs fee imposed on imported products sold here in Dubai. The second one was a 90% reduction of fees imposed on submission of customs documents, a freeze on the 2.5% market fees levied on all facilities operating here in Dubai, reduction of municipality fees imposed on sales at hotels from 7% to 3.5%, and a freeze on fees charged for the sale of tickets, issuance of permits, other government fees related to entertainment and business events. We also saw a reduction in water and electricity bills by 10% and a reduction in deposits for the same by another 10%. There were also a few changes to bank guarantees or cash requirement rules. So this was what happened in Dubai. In Abu Dhabi, some stimuluses were introduced for SMEs, which include suspension of real estate registration fees until the end of this year, reduction of industrial land leasing fees by 25%, suspension of tourism and municipality fees. We also saw exemption for commercial vehicles, etc. So these were just some of the economic stimulus packages that we have. So if you go on arabianbusiness.com, there's more details on that. But today we are going to be taking questions from you regarding these stimulus packages, tax reliefs, corporate governance in the time of COVID, etc. And joining us remotely, of course, we have Joanne Clark from Pinsent Masons. Thanks, Joanne, for joining us here.
Not at all, Shruti. Thank you so much for having me, and I'm delighted to be able to speak with you on this topic today and your audience, of course, as well.
Likewise, Joanne, likewise. So I'm going to start with this first. Right now, the recession that we're headed towards and the recession that's predicted, do you think it's worse than the 2008-2009 global recession that we saw?
I think the difference in these two recessions is probably, so far as we can see, and we have to remember that, this has happened quite rapidly in a very short period of time. And also we don't know what might happen quite rapidly in the next kind of 4 to 8 to 12 weeks. And I think the difference in the two economic dips from 2007, 2008 and now is the speed at which it's happened and the way in which it's impacted us. And the speed I've mentioned there, but when I say the way in which it's impacted us, there's something very human about this impact. And we're talking today about the economic impact of that, the tax impact of that, but we can't forget the human element to that. And I think the human impact of this crisis, which obviously we know people is one of the strongest thing in most businesses, even if, you deal in goods and not a people business or a services business. People are essential for businesses to be able to keep operating. And the fact that this crisis is about health, it's about hospitals, it's about maintaining health and people obviously getting sick and these terrible things that we're seeing happening. That has nearly a double impact because we have the natural economic impact from a crisis like this where businesses are struggling to operate. Some may need to shut down in terms of financing from a banking perspective, but there's the human element of it. And that human element we can see with the statistics we're seeing around the globe of the financial impact of this crisis globally is really having a double effect than what we've seen in the last crisis, in our view.
Right, for sure. And I think everyone is talking about the human and economic impact, but then globally there are discussions about how the economic impact tends to be much higher in the longer run compared to the human impact, because when we see the curve flattening, obviously the human impact of it is going to probably stabilize, hopefully stabilize, but then the economic impact might be for the long haul. Is that true?
Yeah, exactly, Shruti. I think that's very true. And I think the reason for that is, again, if we do a comparison the way you've raised it, is that, and it's the first point we're talking about today, is the level of economic and fiscal stimulus needed to be provided by countries, by states, in order to keep the economy running. And although, I suppose, in the last crisis we did see that, this crisis has been more visible. We've been able to see it coming. We've seen the human impact before, I suppose, the economic impact has hit us. And so states and businesses and countries have had a little bit of time to say, actually, this is going to be really significant and we're going to have to put some fiscal stimulus in to keep the economy running. And I suppose because of that, we've seen the values of stimulus that have been implemented, some of them being 20, 30, 40% of a country's GDP of a stimulus package being offered. And that's quite significant. That's something, that in my lifetime, this is the first time I've ever seen that happen. And I'm sure it's the same with many.
For sure. So now speaking of the fiscal stimulus packages, I'd like to know from you, being an expert, how would you rate it, the ones that have been introduced here in the region compared to the ones announced globally?
I think the most important thing to look at when you look at the fiscal stimulus in the region is that a lot of the relief, and I'll use relief sort of in inverted commas in the sense of where cost is actually being reduced for businesses, regardless of their size, are more limited than where we have deferments and pushing stuff down the road. So if you look at a lot of our relief that are actually given that are cost savings, they're given by the government on, you've listed some of them already, Shruti, municipality fees, tourism fees, levies, charges for banking transactions, etc., etc. And these are all, I suppose, in different areas of a business. They're coming from different authorities. Some of them may not seem significant to businesses. Whereas if we compare the fiscal schemes in other regions, and Bahrain is probably a very good example within the GCC because it has followed suit with some of the global regimes where private sector salaries are actually going to be contributed to. That is a much bigger contribution towards businesses in the region, private sector businesses, SMEs, etc. And it obviously will contribute a lot more to help businesses keep running. Whereas some of the fiscal stimulus packages we've seen in the region are very, very beneficial. Businesses should try to avail of them, but they're not as straightforward as, cash will be handed to help private sector salaries. You do need to deal with the banking system to try and get the relief, or you're getting it from, as you say, DIWA, or you're getting it from a transport authority, or you're getting it from a labour authority. So it's coming from a lot of different angles, and businesses need to work to try and avail of that as much as they possibly can.
For sure. So now, I just again need to remind our viewers that this is not just a Q&A where I'll be asking Joanne the questions. We are taking questions from you, so just post them in the comments below and I will take them here with Joanne. So speaking of all of these packages, it's great that it is being announced, but one question that most of the businesses here have, or one of the few questions that they have is, first, on what basis are these SMEs and businesses going to be chosen in terms of who is going to be able to avail these stimuluses? Yeah. And the second one is, when exactly are they going to receive the cash in their accounts in the banks?
Yeah. So I think what's very important, I think this is very relevant questions because, we see all these headlines, Shruti, around, 256 billion AED is now the UAE stimulus plan and it's going to help support businesses. And you can see where these questions are coming from. I think the most important thing to maybe break it down to help businesses understand these stimulus packages is that a lot of that stimulus is either central bank stimulus, and that's across the GCC states, or else it's the government stimulus. And each of those get broken down into subcategories. So on the government side, tax is one of them. We have customs authority relief, we have tax authorities relief, we have municipality charge relief, etc. On the central banking side, really what they are guaranteeing is around the liquidity of the banking system in the region. And so if we look at that in terms of a supply chain, you have the central bank and the government sitting at the top. You have the local banking system, so different banks in the region that support businesses in their credit and in their finance. And then there's the interaction of that banking system with businesses. So if we look at your question directly, when am I going to get money into my bank account? What I would say to you there is what these stimulus packages are doing, they're guaranteeing that the cash will be available if businesses now need it because of COVID-19, where naturally they may not have needed it.
But how are they going to find out which businesses need it? Because right now, I think most businesses are going through a downturn, essentially, aren't they?
Yeah, exactly. And, I was on a panel earlier this week with CFOs and someone made a very, very relevant comment, reach out to your bank. If you're a business in the region, actually, it's on you. You need to reach out to your bank, because what the stimulus package is saying is that the money will be available. Of course, they're not saying you don't have to go through the normal credit procedures to be able to apply for credit in the region. You will still need to do that. But what they're saying is the banking system will be able to cope with the higher volume of applications for credit in the region, and where businesses that already have credit cannot meet their current payment cycles or need some relief on banking fees and interest charges, that the banks will be financed to be able to do that. So this is not going to be, X number of SMEs get a nice email on Monday of next week to say, this is the amount of funding we've made available to you. The process will work the way the banking process has always worked.
Right, so basically you're saying that if you don't ask, you won't get.
Well, that would be our recommendation, is that you follow your normal procedures, which is that COVID-19 has put additional pressure on your business from a financing perspective. If credit finance is the way that your business wants to go, then you need to be going to the banking system and availing of what's available. And what's available is that where the banking system potentially, on normal circumstances, may not be able to deal with this level of demand from businesses needing finance, that is where the central bank stimulus package comes in, to make sure that the banking system stays liquid and that businesses can avail of that funding. Now, of course, there is relief in there, which is that payments are being deferred, banking fees are being exempted, certain registration fees are being exempted. We've seen certain ATM and different other transaction fees. So there are actual cash savings there as well.
Yeah.
But in terms of funding, what businesses need to do is make a decision themselves internally on their working capital, and obviously cash is king right now, and where they need support, they need to be going to the banking system to see how they get that support. And I think what the stimulus should give businesses comfort in is that the banking system will be able to cope with that demand, and that requests will be turned around on a quicker basis.
Sure. So, I think even you mentioned it briefly about the 256 billion dirhams package from the central bank here in the region, of course. So over there, we're talking about deferral of payments, etc. And interest is one of the key topics. So are we going to be seeing more zero interest loans being provided by banks to the SMEs? Because that is one huge demand.
It's one huge demand, and even in the tax pay, Shruti, that's obviously from a banking and financial perspective, and my own area of expertise is tax, and there's a lot of questions also around tax, as in, are we going to see, let's say, for example, in the UAE, VAT returns postponed by 3 months? So there's a lot of sort of hot topics, because there's 2 or 3 or 4 things that businesses are really keeping an eye on a daily basis, because these things would really support them. Zero interest loans being one, and some of the other tax relief that, let's say, for example, were introduced in some of the other GCC states and have not yet been seen implemented in the UAE yet. And what I'd say on that is the same as all of the other reliefs that have come in response to COVID-19, which is that there will be no blanket response. There will be no, for everybody in this category, no longer will there be interest rates. It seems unlikely. It's a space we'll have to watch, but if a relief like that does get promoted as part of the stimulus package, again, it's for businesses to go to the regulator or go to their bank and see what the conditions for that are and can they avail of it. And if I can transpose that into some of the sort of tax measures in the region, because the government stimulus does feed down into tax authorities and the customs authorities. And I would say the exact same for businesses in the region, and that's across the GCC, not just the UAE, which is that those tax reliefs fall into 2 brackets. One being automatic relief that you will get, and you don't need to be, writing to your tax authority to get them. And most of them are deferral regimes.
Right.
They're not actually a cash saving. They're not a cost reduction. They're just pushing your obligation further down the road to give the business time to breathe and maybe to use that cash for something else now if the business is cash constrained.
Right. Just speaking of that though, speaking of taxes, is there any tax that can be avoided for now legally?
So customs duty is being relieved in a lot of countries across the GCC. We've seen some really good relief on the customs duty side, and it's the tax that has been most relieved, as in exempt. So you already mentioned in Dubai, customs is usually 5%, and it's been reduced by 20%, so in essence by 1% customs duty for a lot of customs brokers moving goods into the region. We've also seen some relief in some of the other GCC states. For example, we have 905 food and medical products listed as being now customs exempt in one of the other GCC states. And so customs duty definitely is the one area where there's actual cash saving at the minute when it comes to taxes. The other area, which is not tax but is penalties, is a very short window of opportunity in Saudi Arabia, whereby if you have tax obligations and you have not been fully compliant, if you have an error, maybe you didn't register on time, maybe you filed a return late, etc., there is a short window until the 30th of June that any business, not just businesses that are maybe struggling because of COVID-19, any business can avail of this tax amnesty, can write to the tax authorities in Saudi, declare, what they should have been filing, maybe if something's late, etc. And the fixed and tax period penalties will be exempted. Now, this is a huge saving. We have seen penalties in the millions, 100%, 200% of the tax liability in penalties in Saudi. And we've already seen businesses challenging the tax authorities in Saudi to the courts and to the Dispute Resolution Committee to try and relieve those penalties. So for me, the biggest thing in the GCC from tax perspective that has come out so far is this tax amnesty in Saudi. And any business that feels that they have a correction or something that they need to correct on their taxes in Saudi should take that window between now and the 30th of June.
For sure, but we're not going to be really seeing all of these penalties being waived off, yeah?
It's very rare in the region that penalties from a tax perspective are waived. I've gotten a number of questions in the last few weeks about whether the tax itself will be waived, whether you can request for deadlines to be postponed till next year or penalties postponed. It's not very frequent in the region, and that's why I would emphasise that regime in Saudi is a very opportune window that businesses to try to avail of if they can at all possible.
That's brilliant, and I'm glad we're getting this information out here on AB Live. But I'm just going to take a few questions from our viewers right now. So we have Ashraf, who's asked, is the stimulus package in Saudi and UAE for all companies or for only those that are indigenous owned? So I think he means that are these only for locally owned companies, or do they also apply to expatriates or companies owned by expatriates?
So I can only really talk on the tax aspects of that because I know some of the employment law aspects and other aspects of the visa and stimulus around it do differentiate between locals and expatriates. So I wouldn't be an expert on that area. But from a tax perspective, there is no differentiation. So if you want to avail of the customs duty relief, the excise tax relief, this tax amnesty in Saudi, it's just for any taxpayer. So there's no differentiation, I suppose.
Right, just taking one more question from the viewer right now. Is there a monetary stimulus or a fiscal stimulus or both? I think a lot of people don't really realize the difference between the two, so maybe it might be worth explaining it right now.
Yeah, of course. So the fiscal stimulus packages, in essence, is to financially support the region during COVID-19. And I think the key, and you asked the question already, Shruti, around, when will we see this money? I think the key understanding that businesses and individuals, private individuals, need to sort of think about this fiscal stimulus is that it filters its way down through the system. So some of it will come through the banking system, some of it will come through each of the emirates and the municipalities. Some of it comes through the tax authorities. Some we see coming through DEWA and the water and the utility. When you add all of that up and the cost of all of that, that is what the fiscal stimulus package is. And so when we get numbers like 256 billion, it's the cost of giving those reduction on water charges, exempting, real estate renewal fees, exempting banking fees. When you add all of that together, that's what the fiscal
Right, so it's not really the actual cash that is being injected into the system. This is just a cumulative figure, right?
Exactly.
Interesting. Right, so I'm just going to remind our viewers again, just keep your questions coming in, post them in the comments of this live session below, and I will take them here with Joanne Clark from Pinsent Masons. So again, we're talking about tax and tax reliefs, but one thing I really want to ask you right now is, in terms of tax help, what kind of help are we expecting? Is this access to credit? Is there a wage subsidy program essentially? What are we seeing here in this region?
In terms of tax planning, there's probably two sides to it, which is the actual tax relief, which we've talked about some of them. So there's a lot of timelines being deferred by a month or two, so you don't have to file your returns and you don't have to pay any tax liabilities for a number of months. And they're mainly being applied automatically. So if you're already registered for VAT purposes in the UAE or corporate income tax purposes in Saudi, or let's say excise tax purposes in another GCC state, whatever your current deadline is, let's say for your March, April, May returns, they will be pushed. And most frequently, they're being pushed by about 3 months. So let's say your March return was normally due in April. You now get it deferred for May, June, and July, and then it will be due after that. So that's the first type of relief we're seeing.
So I'm sorry, so this is just a postponement. It's not really
a postponement.
levy.
Exactly, Trudy. And the bit of advice that I would give to businesses, these are brilliant and we should avail of them. And if that frees up cash today that you can now pay salaries with or you can pay vendors with, obviously that's a huge benefit to businesses when cash is being put under so much pressure. But the key thing for me, for business to realise is because it's a deferment and only so many periods are being deferred, at some point in 3 to 6 months, you will have a period, let's say August of this year, where you might have to file 2 returns and pay 2 liabilities because an earlier return has been shifted. And so the key thing for businesses is that if these deferments in deadlines are being applied to your business automatically and you're availing of them, tax planning. You need to plan to still prepare that return in 3 months' time. And from a financial perspective, if you use the money that you normally would have paid the tax authority with today, and you're using it for something else in your business because cash is under pressure, then you need to finance that in 3 months' time. And if you don't, then there's the risk of penalties being applied. So I think tax planning is very key around the stimulus packages.
Right. So from what you're saying, it looks like basically if businesses are able to file their tax returns right now, so it might be better to do it now because eventually there could come a time where they might have to do 2 or 3 tax returns, and which might end up being a burden later because the penalties will come in later.
Yeah, that 100%. My recommendation is if the business can still have its internal teams or its external tax support, whatever they're using, prepare the returns now and plan to be able to pay the cash at a later date when it becomes liable. That's the key thing, is to not just write this off and say, well, that's great, we don't have to pay tax. Because in 3 months' time, then that liability will arise. And if you don't have the cash at that point, you have the penalty. But I think on the positive side, Shruti, aside from the actual tax relief that the government is implementing and the tax authorities are implementing, there's a lot of planning that businesses can do themselves. So, for example, VAT is just one of the taxes that has implemented across 3 out of the 6 Gulf states in the last number of years. Yeah. And that refund constantly for businesses are building up on their account with the tax authority. Sure. And a lot of businesses don't put in a separate request for that refund because maybe they're afraid they'll get audited. They kind of push it down the road and think, okay, we'll look at that at year end, etc. Now is the perfect time to be applying to the tax authorities if you have any VAT refunds built up to get them paid now. And that, may contribute to the overall cash flow within the business, and tax can be a contributor to that. And that's not a relief that's been brought in because of COVID. The opportunity is always there, but a lot of businesses sometimes leave the VAT refunds and don't deal with them until later in the year. So
Can I ask you about the bad debts then when it comes to VAT? Yeah. So what's going to happen with the VAT bad debt?
So bad debt, again, is a relieving mechanism within the VAT law across the region, so UAE, Saudi and Bahrain, that businesses always have the opportunity to use. So you may choose to use it now, if you're under very significant financial pressure, but it's something that you can avail of and you should avail of as soon as you possibly can. And in essence, what the bad debt relief in the region does, it says, well, if you have issued an invoice to your customer and the day you issue that invoice, you've charged them back 5% and you've had to pay that VAT on that sale to the tax authority. So you've had to come up with that money and pay it to the tax authority. If that customer has still not paid you within 6 months, and so you've carried the cash flow burden of the VAT for 6 months, then at the end of the 6 months in the UAE, you can claim bad debt relief. And all that means is that you claim that VAT back from the tax authorities.
Right, but how do you prove all of this? I mean, what is the way to prove it?
Yeah. So it's a good point. There are conditions. It's 6 months in the UAE, it's 12 months in Bahrain and Saudi. There are conditions. So there's conditions you need to follow. You need to have marked it as a bad debt in your books of accounts. From a UAE perspective, you have to send a letter to your customer to say that you're claiming the bad debt relief. And if that customer is also a business, they need to make an adjustment in their VAT return as well. So there is procedures you need to follow, but they're not that difficult of procedures. If businesses set them, follow the procedures, this could release, again, cash flow for businesses. And it's a procedure that's in the law. It's not a specific tax relief for COVID. So it's a very easy day-to-day tax planning that businesses can avail of.
Right. So now again, you did mention earlier that many companies might be filing for bankruptcy. A lot of SMEs are just going to probably wipe out of the picture once we come out of COVID-19, etc. What I really want to know is the insolvency law that was introduced sometime last year. How is that going to play in this entire picture? What role is it going to essentially play?
Yeah, I mean, the insolvency law, to be fair, doesn't have any specific tax aspects to it. I think it's very welcome when we see these new regulations brought into the region. So corporate transactions like insolvency, when businesses feel pressure and obviously get to that point in their trading that it's regulated in the region. So we do, as a law firm ourselves, we do always welcome when the region gets more structured in terms of exactly how these procedures would look. From a tax perspective, it doesn't have any specific aspects to it. The bad debt relief is very relevant. So, it's relevant in terms of that discussion that we've just had, which is that if you're getting to a point of insolvency, obviously you need to start thinking about things in terms of, what your books of account look like. Is there any tax things that you need to worry about? That could be tax deregistration. There are actually penalties in the region if you don't tax deregister on time.
Yeah.
So definitely, things around, and I think corporate structuring generally, whether it's insolvency, whether it's, you decide now as part of what's happening with COVID to sort of sell off one area of your business, close a particular branch, maybe pull out of one of the GCC regions, etc. Corporate structuring, just as an activity, and probably in terms of shrinking at the minute rather than expanding because of the situation we're in, it needs to be planned very specifically by businesses. And if we look at it from a tax perspective, what I mean by that is, we've been talking about optimization, but we also need to manage the risk and mitigate the risk. And if it's the case that you pull out of a particular region, if you sell off a bit of your business, you could do that by a share sale, you might do that by a business sale. All of these have tax implications. And just the main message I get for businesses on that is that the region tax regime is new. A lot of businesses don't understand that they need to consider the tax aspects of things like insolvency and corporate restructuring, and there is then a risk of getting it wrong and having penalties, and the penalty regime in the region is very significant. So
but obviously when you're talking about risk mitigation, sorry to cut you off there, but then I think we need to include the whole idea of insurance and what really needs to go into insurance policies, especially for corporates. Is there any suggestion coming from Pinsent Masons regarding that?
Yeah, I mean, we have one of our departments within our financial services legal sector, which on a day-to-day basis is dealing with the insurance companies and obviously brokers and customers in the region around insurance policies. Force majeure as well is a very key area, which I think kind of collaborates very well in terms of pressures in the region and insurance policies, which is something happening that, of course, you just have not planned for, and what has driven that to happen, and then who is liable for that. And, that's a whole, I would say that's another whole topic that probably we could do a whole session on. But I think it's a key point for you to raise, Shruti, in this context, which is that businesses just need to be so conscious, whether it's contracts that they're in and the insurance around those contracts, whether it's their business as a whole and the insurance around their business, their industry sector, force majeure, the insurance policy, the finite detail of that insurance policy and what they might be on the hook for with third parties or themselves within their business. It's just something that really needs to be put under a magnifying glass at the minute by businesses. And again, it's something that it's the business's obligation to be proactive on this to mitigate the risk.
For sure. I'm just going to remind our viewers again, we have a few more minutes of the interview left, but if you do have any questions, post them in the comments below. Just taking a few more questions from our viewers right now. So I think one of the main key challenges is has been when it comes to managing cash flow, including working capital and expenditures. How do we come around this challenge, and what would be the best practice?
Yeah, I think it's a little bit of a flow that needs to be managed efficiently and effectively within the business. And there's a number of aspects to that, right? There's the way in which you get your financing. We talked about credit finance already, but there are also ways within the business to just manage the working capital more effectively during this time. And before I even talk about tax on that, that's, and I'm sure every business in the region is doing it, which is just, how far can you extend credit terms with your vendors? How narrow can you have credit terms with your customers? Mm-hmm. Is there any payments that you can defer the payment scheme? We've talked about deferring payment schemes with the bank, but potentially there's other things that you can defer payment schemes, maybe, assets bought on hire purchase, etc. So I think it's looking at your full cycle of cash flow within your business and finding where you can extend or retract terms as best you can, so that cash flow cycle for the short term, if you even look at a quarter in advance, becomes a little bit more effective and efficient to the business. And tax flows into that as well. Some businesses have inefficiencies on how they process invoices coming in from vendors. And by, recording those invoices in your system, let's say 3 days earlier, you might get that on an earlier VAT return, and therefore you may get that VAT refund earlier from the tax authority. So it kind of comes down to efficiencies and looking at that full working capital cycle internally and making sure that you're looking at every aspect of it and making it as effective for the business as you can on a short-term basis, of
But
course.
It's not just the working capital that is in question when it comes to cash flow, right? We're also talking about expenditures.
Yeah, of course. And unfortunately, it's a harsh reality, and a lot of us are, watching the space in terms of, employees and retention in the region, because obviously employees are a huge cost. And I think from a tax perspective, we've touched on some of those things in terms of if you can avail of some of the tax relief in the region, such as the customs duty relief, such as the Saudi tax amnesty, that is an actual cost reduction. And, if businesses don't proactively invest, either their finance team or tax team, in identifying those reliefs and availing of them, then that's a reduction of expense that has been missed. So I definitely think from a tax perspective, there are some ways to genuinely reduce your tax bill, mm-hmm. and therefore your overall expenses of the business to try and contribute towards, the cash that's in the business at the minute in order to cover expenses.
Right, Joanne, unfortunately, we're running short on time. We do have a few more questions that are coming in.
Sure.
I'm just going to take those right now. So one of the questions we have is, what is going to happen to most of the M&A activity, mergers and acquisitions? And I think right now it's a very relevant time to ask it, because there were a lot of proposals in place. We saw a lot of banks merging, consolidations happening in different industries. Is that going to be put on hold?
Yeah, I think from what my visibility on that is, and our visibility as a firm today, where we are, right? So we are in the middle of April, and this definitely is a week-by-week thing, because nobody really knows what the next couple of weeks looks like. But from our visibility, what we can see is that M&A today is being postponed and not cancelled. And that's mainly what we're seeing. I'd say that's probably 70-80% of what we're seeing, which is that there's still an intention to go ahead with M&A activities and transactions that were planned, that were researched and invested in already, but that the deadlines are being postponed. And I would say even for transactions that have already started, they're continuing, but we see them continuing at a much slower pace than what they were happening at. And obviously that is just the same as everything, I guess, which is watch this space. But our visibility on that is that M&A hasn't been cancelled per se, but it's slowing way down, and deadlines are being deferred. And mainly, by a quarter or by 2 quarters rather than, let's say, by a year.
Right. Just one last question that I am going to take from one of our viewers, again, Ashraf.
Sure.
He says, since the whole point of stimulus is to encourage spending, how do they check if the disposable income doesn't go into saving, since that's the mood right now?
Yeah, I think it's a very valid question, and it's a hard one to monitor by any state across the globe. I suppose the way in which some of these reliefs have been given, if we think of things like the DWA, if we think of fees being exempted, their blanket being exempted. It's not being assessed based on the business. They're making an assumption that every business in the region, regardless of what industry sector you're in, will be under pressure. If we look at some of the other relief, you'll see that some of the GCC states have very specifically indicated tourism industry, hospitality, etc., and are trying to target the relief as those particular businesses. So again, we've seen tourism fees being reduced in the hotel sector, event fees you've already mentioned in the event sector, etc. So some of them are more targeted. When it comes to the banking system, I suppose, in making sure, I guess, that some of this is not just going into savings, the same rigor of testing will be done on granting credit. There's been nothing to say that, banks will just be approving loans without the normal checks and credit facilities. And I suppose that is probably the line of defence in trying to make sure that the loans are going to what they are intended for.
Right. Great. Thank you. Thanks so much, Joanne, for joining us, and thanks for those great insights. We've definitely learned a lot from you, especially the things that you've said about Saudi Arabia and the tax waivers that's actually happening there. Really, really interesting content that we got from you right now. Again, hope to speak to you soon, probably with another topic in the time of COVID, of course.
Perfect. Yeah. And Shruti, I might just close to say, my one key tip for businesses in the region at the minute when it comes to the topic of tax and I suppose cash being king is just to take the time that they have now to really look at their tax governance, make sure that it is quite sturdy and that post-COVID-19, the businesses will be ready to cope. We do feel that potentially post-COVID-19, we may see more investigations and audits by the tax authorities into, I suppose, what's been happening with businesses over this time. And so it's a good time for businesses to look at their tax governance, their internal risk management, and sort of get their house in order from a tax perspective before we see what comes out of post-COVID. So that would be probably my one takeaway tip for anybody listening today.
Great, thanks. And I think right now there is a requirement of corporate restructuring itself, which a lot of companies are talking about right now. But thanks again for those tips, for those insights, and for all of the information you've shared with us today. And thank you to the viewers who've shared your questions here. I've tried to take as many as I could. And again, we will be back again next Tuesday with another topic.